Hello, my friends on LinkedIn. In this video, we are going to examine a particular investment which is suitable for risk-averse long-term investors in particular, which is called the S&P 500 Low Volatile Index ETF or the SPLV. I welcome you to this guide on how to evaluate the SPLV. In this video, we will explore what SPLV is and how to assess its suitability for your investment goals, and why its transparent and highly regulated investment option could be suitable for you. Let's get started. Here right now I am on the Invesco's S&P 500 Low Volatile Index ETF website. The ticker number for this particular ETF is SPLV if you would like to include this in your portfolio after evaluating this. Here there's an interesting section on the website where you can understand how this fund can help meet your investing goals. And I'm going to keep this web tab open. And there are also other areas where we can utilize, which is a performance area, which gives an interesting comparison about how the S&P 500 Low Volatile Index performed in comparison to the S&P 500 index itself. I'm also going to the document section where there are interesting information like the fact sheet as well as the S&P 500 Low Volatile Index ETF's infographic, which gives us plenty of information to evaluate the ETF. To understand the SPLV, it is an exchange-traded fund that aims to track the performance of S&P 500. We can see that in the overview. This index is designed to provide exposure to the US large-cap stocks with the lower volatility compared to the broader S&P 500. Here it is written, the Standard & Poor's 500, S&P 500 of 100 securities comprises of the S&P 500 Low Volatile Index, SPLV. These stocks realized the least volatility over the past 12 months. Volatility is, in fact, it's written as a statistical measurement of the magnitude of up and down asset price fluctuations over time. The fund and the index are rebalanced, reconstituted every quarter. It gives potential lower volatility, help to stay on the course, and there is no sector constraint. The fact is, if there is a drawdown of 10% in someone's portfolio, it needs to work back 11% to recover the loss. Likewise, this is a magnitude if there is a drawdown in the market, how much more the portfolio should work back to regain or recover the loss. In this instance, 30% drawdown would demand the portfolio to work a 43% to recover or reach at least the initial levels. Likewise, a 50% loss requires your portfolio to work back 100% to recover at least the loss. That is the magnitude of volatile investments. This gives you more information of the low volatility, how it works, what is the investment philosophy based upon, and how they reconstitute and rebalance it, which you can read at your own convenience. And I will share the link for these pages in the post. This important document is called the S&P 500 Low Volatile ETF's fact sheet. The historical performance in comparison to the S&P 500 is one way to understand how it has performed in different market situations. This particular document gives you just the enough information to understand this, which gives you more description about the volatility metrics. To examine ETF's historical volatility and compare it to the S&P 500. This helps you to gauge its stability above everything. The expense ratio is another factor which is essential to understand, which is the costing of investing into SPLV. Lower expenses generally lead to higher returns for investors. In the fact sheet, we can see that the expense ratio for SPLV is 0.25% only. From these information on the website, we can understand how transparent and how much regulated these kind of assets are. So SPLV is particularly appealing for investors seeking transparency and regulatory oversight also. The regulations. ETFs are highly regulated investment vehicles and SPLV is no exception. It must adhere to strict regulatory standards, providing a level of security for investors. The publicly listed valuation, secondly, for the underlying assets in the SPLV, they are listed every day and traded every day. This transparency allows investors to know the exact value of their investments at any given point of time. So in conclusion, this is a particular investment which you can include in your portfolio for investors who are risk averse in nature. If you're risk averse and prefer a more stable investment option within the US large cap segment, SPLV can be a suitable choice. Also for long-term investing. For long-term investors, SPLV characteristics make it attractive for long-term investors who want to minimize the impact of market fluctuations on their portfolio. So in conclusion, the S&P 500 Low Volatile Index ETF or the SPLV is an ETF that provides exposure to low volatility US large cap stocks, which makes it ideal choice for risk-averse investors and those who value transparency in their investments. Its highly regulated nature and the public listing valuations make it a reliable investment option. But before investing, ensure you do your due diligence, understand your financial goals, and consider how SPLV fits into your overall investment strategy. If you would like to evaluate all these options and how this SPLV index fund can be suitable for your retirement needs, you are welcome to book an appointment on my profile section. And I am a specialist who works for retirement needs for hospitality people. My name is Sudeep Alex. I thank you for watching this video and we hope this guide has been helpful in evaluating the S&P 500 Low Volatile ETF, the SPLV. Thank you.